Hello, my beautiful friends. This is Shreen Purewal with the BC Home Group. And boy, oh boy, do I have updates today. Has anyone been following the banks and the stock market today? And you're probably wondering, what does that have to do with real estate? Also, I like to talk about the real estate stats that came out last month for here in Victoria, BC. But before we get down to it, let's talk about the market and what was going on. For those of you who follow the stock market, I do closely because there is a correlation for sure that we've seen over the years between the stock market and the real estate market. And to explain to you why is because a lot of the loans that we're seeing in the market, or a lot of the private money that's being moved from the stock market into real estate, is determined by the bond market, and the bond being the lending market, if you want to call it that way. So it's important to follow this closely. And over the last few months, I mean, if you're following the US news, you're saying, oh, this bank has done really badly and we have to bail it out because of poor management. Now we're hearing of another bank coincidentally being managed poorly. It can't be that every bank is being managed poorly, okay? It's a sign of the systems and certain systems that are collapsing. You watch my video, I said in the last video that we expect interest rates to go back down end of quarter four of 2025, which means end of the year of 2025. And we expect 2026 for us to come out of this cycle. But right now we're heading into this cycle while in the middle of all this banking crisis that's happening out. We also have a supply issue for more affordable homes for most people who are trying to get into this market. So the rental market's doing good. There's a supply issue still putting pressure on prices to hold high. And let's see what we're seeing in the Victoria market as well. But before I get to that, I want to come back to the market, the stock market today, and the banks. BMO, Royal Bank, all of them. Just go and check. What are we today? For you guys who watch this video later, want to check this out. Today is May 4, 2023. Check out those stock prices there. What I see happening now is we've also got the debt ceiling announcement. There's too much volatility in this market. It's hard for people to make decisions. Someone be looking at a house and be like, oh, this happened to a buyer of mine. We were looking at homes and what happened? That FTX collapsed, and they're like, we lost a lot of money in FTX. They lost all their crypto money that they were going to convert to buy the house. So things are too volatile, and you're going to see that affect some of the buyers getting into this market right now. So we need some stability, and I expect some stability to come after June when the whole debt ceiling announcement in the US comes under control, and we have more stability also in the stock market, the debt ceiling market, which will feed to that, and also in our real estate market, because it's still a bit, week to week it's changing. Last week there is, multiple bids. This week it's kind of cooling down. It's just all low, I guess, because they're nervous. Buyers then pull back and wait on the sidelines. It's just continuously changing, and it's hard for us, even as agents, to make predictions off of data or try to feel the market. There's certain things that are recession proof. Okay, for those of you watch my video, there's certain situations that are recession proof. If you've got a good location, you've built a good home in a good location, and most areas on the island, good product. So home on land typically tends to do much better than condo. In these uncertain times, those ones will be more stable, higher demand, and easier to forecast on. But having said that, though, I'd like to now discuss the next thing, which is the Victoria real estate stats for last month, for April. I'll be posting some information on that. And if you sign up for my newsletter, you're going to get all that information, as well as other listings that may be a deal on this market right now. So please sign up and subscribe below so that you can get that information. Okay. So now, without further ado, let's go and see some of these stats here. All right, so they're saying here, I love how the real estate board words it. Sales number for this April are more moderate than the higher levels we've seen in recent years. So they're basically saying it's cooling down. More moderate. It's cooling down, but it isn't really still going there. Okay. Now, some of this data, I'm a nerd, studied economics, study stats, and understand how the numbers can sometimes mislead. So let's say, to give you an example, if in 1 month you sold, in the MLS statistic, one house that's 20 million sold, it will skew all the other home prices to go up and say, whoa, prices increased. But realistically, not most of the houses increased. One increased and it took up the prices of the rest. So there's a bit of skew there. And I want to talk to that, especially in the condo market prices. When they say prices have fallen or there's not enough supply, they don't take into account the pre-sale market. The pre-sale market isn't even on MLS, most of it. So that's skewed because it's missing a big chunk of data that's from a market, private market, that isn't even on MLS. So I want you to be aware of that when we look at these stats. The other thing I want you to be aware of is the stats for homes. Again, let's say same thing. If luxury homes sell less in 1 month, all the average home prices will obviously drop in a certain area. Or the next month, few more luxury homes sell, it's just going to skew your data. So the data, I need to understand it more on the back end, that if they're doing weights or there's certain things you can statistically do to make sure that data is as accurate as possible to reflect reality. And I just don't know. I'd actually be curious to speak to the real estate board about knowing their data better and how they're analyzing it, versus just a straight average and one is pulling it all up. So let's go to the single family homes. Single family homes have decreased by 19.4%. Okay. When they say sales, means supply. Okay. It says here decreased 94% from April 22 with 325 sold. So we're selling less, but it's also because there was less supply is what I'm seeing. Let's see what else is here. They're saying sales are more modest. We've got, there were 2,043 listings for sale at the end of April 2023. So there was a bit more homes for sale than the month of March. So you saw a slight increase in supply and a much more increase from last year, which is shocking because it seemed like there wasn't enough homes for sale. But I'm glad supply is increasing because that's what we need. We need the market to be balanced. It was a seller's market. It's slowly coming down. It's still a seller's market, guys, from what I'm hearing. But it will reach a point now where the market is called what we see in balance, where supply and demand is there, so that we can get a true value of fair market price. Okay. Here, I like to read this part. Though we are seeing multiple offers in our market, these situations are dependent on a number of factors, including price, competition, area, condition of home, blah, blah, blah. This means sellers should seek clarity on what to expect during their transaction as the spring market continues to evolve. And that's well said. It's evolving. It's this last week, it's something else this week, and it's going to be something else next week, honestly. What are they seeing here? Overall consumer confidence in the market has returned, accurately priced. I'm going to slightly, I think so. It is coming back because they're like, okay, we are bottoming out, so it's time to come back in. But I still feel, as far as the banks are concerned, they're tightening up because of all this volatility in their stock prices. They're going to be tightening up on the lending side. So yes, buyers may want to get in, but the banks are the ones giving them the money. So I'm very curious what's happening there and what we're going to see in the next few weeks. They're just going to be more conservative on how they lend money is what we're going to see. Let's talk about price here. Home price index benchmark value for single family home in April. Okay, so the home price that they're saying was 1.4 million. And the year before that, in last year is 1.4. This year it's 1.2. So they're seeing a decrease of 11%, but it was still up from March. So decrease from last year, but it's slight increase from the month before. And the same thing for condominiums. it's saying it decreased. It was 630 last year and it's 560 this year. So ladies and gentlemen, I love to see how those prices are. They don't include pre-sale prices, but we're seeing condo prices go down. We're seeing home prices go down. Are we bottoming out? Is it the bottom? If anyone says it's the bottom, no one has a crystal ball. But I will tell you this, in the long run, it's upward trending. So 2025, 2026, we expect this market to recover. Now, where the bottom is in the next few months, I can't tell you. No one could tell you. The stock market, if the stock, I heard this thing that I love. He said that if we could tell when the bottom is, we would be multi-millionaires. Could we be putting all our bets in? No one can tell you that. But I will tell you, if you're in it for the long term, same with the stock market, same with the real estate market, it always upward trending. But timing is important. And that's the question you want to ask here. Okay. So update on home prices, basically in the condo section, townhouse section, and housing sections, we've seen decreases in prices since last year. We've seen more supply, they're saying, but they're saying these multiple bids have a number of factors based on the home's condition and the demand for those specific areas. And that's what's driving those bidding wars up. Okay. So what else do I want to talk to you guys about? So we spoke about last month's, statistics. We spoke about the banking and bank stocks and what's going on. We spoke about the US debt ceiling and, our Canadian economy is highly dependent on the US economy. One of the biggest things that a lot of people don't realize is with determining the valuation of a currency, what they do, the Bank of Canada is the one that, sets that rate, the money value. And what they do is they peg the value of your currency against several currencies. And each currency that they peg means if this one goes up, this one goes up. They actually have a fixed connection with the other currency values. One of them that has the heaviest weight on the Canadian dollar value is the US dollar. So it's important for us to know that market. It has a heavy influence on our market. So that's why I like to speak to that. So we're going to see some effects come out of this in the next few months. But overall, guys, don't get too caught up in all of this. Long run, it's upwards. And for the buyers, if you're pre-qualified, that's awesome. That's a good sign. Means in these tough times, the banks trust you enough to give you money to buy. And if anything, all the stats are showing now is the time the market's getting into balance, because you're seeing it was the sellers where you're seeing a slight decrease from the month before. You're starting to see seller and buyers starting. Okay, it's still sellers, but it's starting to come close. So I want you to be aware of that. And what else can I say? If you have any questions or concerns or want to know more, please feel free to reach out. I'll try to help as much as I can. And I want to really give you guys a heads up. This is my personal thoughts on the market. It could very well change. And I don't have a crystal ball, so I don't want to say we've bottomed out. I'm just saying the market is getting more into balance. It's been sellers. The buyers are now getting more and more of a say because we're seeing those prices fall now. And how do I feel about that? I think that as an economist, the number one thing we're taught is equilibrium. You want your market to, and I think as you study all these, what's it? What's that? Oh my God, it's skipping my thoughts. But all these channels that are talking about, the markets and, going up and down and whatnot. Everyone wants the markets to be in balance and have stability. Equilibrium is what they call it. So I want to see that. I do want it to be a market that's in balance and it's got stability. So let's stay tuned. Any questions? What are your thoughts? Please put it down here. And if I can answer it or speak to it in another video, I will be happy to do so. Without further ado, awesome listeners, viewers, thanks so much for your support. Cheers. Bye, guys.